Welcome back to Boni's Life, your trusted source for navigating the complex, volatile, and ever-evolving world of cryptocurrency. I am Boni, and today we are diving deep into the state of the crypto market as we wrap up the first week of May 2026. It has been a week filled with macroeconomic tension, central bank decisions, and significant price action that has kept traders on the edge of their seats. If you have been watching the charts, you know that the market is currently at a critical inflection point. And we are here to break down exactly what happened, why it matters, and how you can position yourself for the weekend ahead. We will be looking at the data, the news, the technicals, and the fundamentals to give you the most comprehensive view possible. Let us start with a quick summary of the past week. The global cryptocurrency market cap currently stands at a robust $2.69 trillion. Reflecting a 2.1% increase over the last 24 hours, trading volume has been healthy, hovering around $80.5 billion. Bitcoin continues to assert its dominance, commanding 58.5% of the market, while Ethereum holds steady at 10.4%. We have seen Bitcoin push higher, breaking through key short-term resistance levels, but it is now facing a formidable wall of sellers as it approaches the $80,000 mark. The broader market sentiment, as measured by the Fear and Greed Index, remains firmly in fear territory at a reading of 25, which often serves as a contrarian indicator for seasoned investors. Now, let us conduct a daily review of the events that shaped the market from Monday through Friday. Monday kicked off with a sense of unease. Bitcoin opened the week around $76,342, but quickly faced downward pressure, dipping to $76,472. The market was holding its breath, anticipating a barrage of macroeconomic data and central bank meetings. The lingering uncertainties surrounding the geopolitical situation in the Middle East, particularly the reported failure of peace negotiations, added a layer of caution. Traders were hesitant to take large positions, leading to a relatively subdued start to the week. Tuesday brought the first major central bank decision of the week, with the Bank of Japan announcing its monetary policy. As widely expected, the BOJ kept its short-term policy rate unchanged at 0.75%. However, the decision was not unanimous, with three policymakers dissenting in favor of a rate hike. The BOJ also cut its growth forecast for fiscal year 2026, while raising its core inflation outlook, citing the impact of higher crude oil prices driven by the Iran conflict. Despite this, Bitcoin managed to open slightly higher at $77,368, though it struggled to maintain momentum and slipped back down. Wednesday was the main event, the Federal Reserve's interest rate decision. The Federal Open Market Committee voted to hold the benchmark funds rate steady in the 3.5% to 3.75% range. While the hold was entirely expected, the meeting was notable for its unusually high level of dissent. 4 officials opposed the decision, marking the highest level of dissent since 1992. 3 of these officials specifically objected to the inclusion of an easing bias in the statement, warning about the dangers of persistent inflation. Federal Reserve Chair Jerome Powell also signaled his intention to remain on the board of governors indefinitely, adding a layer of political intrigue to the mix. The crypto market reacted with volatility. Bitcoin experienced massive outflows from spot ETFs, totaling 1,800 BTC, as investors digested the higher-for-longer interest rate narrative. Thursday saw the market attempting to find its footing after the Fed's hawkish hold. Bitcoin opened at $75,752, its lowest point of the week, but quickly began to recover. The Bank of England also announced its rate decision, holding steady at 3.75% with an 8-to-1 vote. The BOE warned that higher inflation was unavoidable, further reinforcing the global theme of persistent price pressures. Despite the challenging macroeconomic backdrop, Bitcoin demonstrated resilience, climbing back above $76,000 as traders began to look past the immediate impact of the central bank meetings. Friday brought a renewed sense of optimism to the crypto market. Bitcoin opened at $76,306 and surged higher, reaching a session high of $78,924. This upward momentum was supported by the release of the US ISM Manufacturing Purchasing Managers Index, which came in at 52.7%, indicating that the manufacturing sector remains in expansion for the 18th consecutive month. However, the report also highlighted a 4-year high in the cost gauge, a stark reminder of the inflationary pressures still at play. In the derivatives market, We saw the expiration of $1.74 billion in Bitcoin options, which helped clear the deck and reduce volatility, paving the way for a potential weekend breakout. Let us summarize the impact of the crypto industry calendar events against our expectations. The week was heavily weighted toward macroeconomic data, and the outcomes largely aligned with forecasts, albeit with some hawkish surprises. The Fed's decision to hold rates was priced in, but the level of dissent and the explicit warnings about inflation caught some off guard. This reinforced the expectation that rate cuts are off the table for the remainder of 2026. On the crypto-specific front, we saw significant token unlocks, with over $235 million released into circulation. Despite this potential sell pressure, the market absorbed the new supply relatively well. The expiration of a massive tranche of Bitcoin and Ethereum options on Friday also played out as expected, removing a layer of uncertainty and allowing price action to dictate the next move. As we head into the weekend, it is crucial to establish reliable triggers based on both technical and fundamental analysis. From a technical perspective, Bitcoin is currently consolidating between $75,000 and $78,197. The price has broken above the 100-hour and 200-hour moving averages, which is a bullish signal. However, it is now facing a dense cluster of resistance starting at the 50% retracement level of $78,928 and extending up to the psychological barrier of $80,000. If buyers can sustain a break above $80,000, it would open the door for a continuation toward the 61.8% retracement at $83,414 and the 200-day moving average near $84,000. Conversely, a rejection at this resistance zone could see the price rotate back down to test support at the 200-hour moving average of $77,267. A break below that level would signal a bearish shift, with $75,000 as the next downside target. Fundamentally, the market is grappling with a complex mix of factors. The higher for longer interest rate environment is a headwind for risk assets, but Bitcoin's unique value proposition as a hedge against inflation and currency debasement continues to attract institutional capital. We saw Strategy add another 3,273 Bitcoin to its treasury this week, bringing its total holdings to a staggering 818,334 BTC. Furthermore, the negative funding rates across major exchanges suggest that traders are heavily skewed toward short positions. This creates the potential for a short squeeze if the price can break through resistance, as forced liquidations would add fuel to the upward fire. In conclusion, the crypto market has weathered a storm of macroeconomic data and central bank decisions this week, emerging bruised but resilient. Bitcoin is testing critical resistance levels, and the weekend price action will be pivotal in determining the short-term trend. Keep a close eye on the $80,000 level. A decisive break above it could signal the start of the next leg up, while a failure to breach it may lead to further consolidation. Stay disciplined, manage your risk, and remember that in the world of crypto, volatility is not a flaw, it is a feature. Thank you for joining me on Boni's Life. Until next time, trade smart and stay informed.